Sure, there is FCMITD, but I hope everyone knows what to do for that now. Perfect. This is done. This is done. This is done. This is done. Hello, people. A lot more simpler and less time consuming. So, pays the interest always on a half yearly basis. Price how much? 1 lakh. I think in this principal amount column, what you will write? You have working note number 2, which gives your net purchase price. Check your working note number 2. Net purchase price is how much? 1 lakh. See, have they posted that? This is done. Like this, you'll have to pick the numbers from various working notes and go on posting. Okay, next, after this, what happened? Interest received on holding. You have received the interest. What is the journal entry for interest received? Interest received. Bank account debit to interest. So the posting will be what? To bank or by bank? So on 30th June, you will post it as by bank. Face value column, principal column, nothing. Because you received what? Interest. Only in the interest column, 22,500. Next, you made a sale. You made a sale on 1st November. What's the journal entry for investment sold? Bank to investment. Sir, when you sell investment, you will receive you will receive two amounts. What are those? One for debenture, one for interest lost. How much interest did you lose and recover? 6,000. What's the journal entry for interest received? Bank to interest. So you will post it as what? By bank. In the interest column, 6,000. Face value column, 1 lakh, 20,000. Principal column, what you will write? Net sale proceeds, which is there in which column? Which working note? Working note number 3. Check your working note number 3. What is your net sale proceeds? 1st November when you sold, net sale proceed is 1,28,200. Have they posted? Yes. Okay, sir. Sir, when you made a sale of investment, you will either make a profit or you will make a loss. Here, what did you make? Profit or loss? Loss. Loss means where it will come? Loss means it will come on the credit side. Loss means it will come on the credit side. Okay, why? It's very simple. Investment is shown at what price? Investment is shown at what price? Cost price. Right? You have sold it at a loss means, is this cost? To get cost, you have to add loss also. Or if you simply want it as formula, or you can remember that, I think maybe this one cash flow statement entry you remember. I told you have to add 3 things and it will go to original cost. Now, what are those 3 things? Bank, accumulated depreciation, loss on sale. What is the entry you passed? Bank account debit, accumulated depreciation account debit, loss on sale debit to PP. When you posted this in PP ledger, it came on the credit side. So that way you can visualize. Okay. So loss comes on the credit side, profit comes on the debit side. Okay. How much loss we suffered? 21,800. That they have posted here. Where will that loss go to? P&L. So you'll write by P&L 21,800. Okay. Next, what next happened? On 30th November, you made a purchase. Okay. When you make a purchase, you'll have to make 2 payments. What are those 2 payments? One for interest, one for debenture. For interest, how much did you pay? 3,125. Face value, how much? 50. What is the journal entry for interest paid? Interest to bank. So you'll write to bank. Interest column, how much? 3,125. Face value column, 50,000. Principal column, what you'll write? Net purchase price, which is there in column number 2. Check your column number 2. How much is your net purchase price for second time purchase? 54,500. Have they posted 54,500? Yeah, 54,500. Next, after this, you made a sale. When you sell, you will recover 2 amounts. What are those 2 amounts? One for debenture, one for interest. How much face value you sold? 90. How much interest you recovered? 6,750. What is the journal entry for interest received? Bank to interest. Posting is by bank under the interest column 6,750. Face value column 90. Principal or amount column, what will you post? Net sale proceeds. Where is it there? Working note number 3. Working note number 3. Net sale proceeds is 1,11,250. Posted off. Yes. But when you sold this, you'll end up making some profit or you may end up making some loss. What did you make? Profit. Profit means the posting will be on the debit side. What is the debit side? You'll post it as 2 P&L 1,250. Next, interest received on holding. What's the journal entry for interest received? Bank to interest. How much? 10,500. Posted on. In the interest column, they are posted by bank 10,000. Okay. Next, what have we told? Interest accrued ka closing balance. Face value column. 140. Interest column 5250. So both are asset. Asset ka closing balance where it will come? Credit side. 145 to 50. In this one you are ascertain it as a balancing. Principal you ascertain it as a balancing. That's it. Okay, G. And all the interest. If interest account has any balancing figure, if interest ka ledger account doesn't get matched, where will the interest be transferred to? P&L. So all this you total. This side is 51. Balance is not matching. Whatever is a balancing figure in interest, you will transfer it to P&L. Does not calculate it. Just transfer. This is your entry. Easy, but there is a scope of doing a lot of silly mistakes here. Instead of posting it in the interest column, we have seen many students post it in the amount column. Because you are racing against time. This much you have to do it in 25 minutes. Not an easy job. Easy to say, but difficult to execute. So when you are constantly racing against time, a lot of clerical errors will happen. So the first primary focus is prepare of the working note. So that even if you don't have time for this, at least you will get some marks, some major marks for working notes. Okay? Alright. Now, if you want to increase and cover them within time, you'll have to practice. That's the only way you can increase your writing speed and thinking speed. The more and more you spend time with a particular subject, processing time will become lower and smaller and smaller. That's just the only way. Yes, people. So this is what? Chapter over? No. But we feel it's over, no? Yeah. So investment in bonds and debenture part we have covered. There is one more called shares. Share if you do now, chapter will be, whoa, 1 minute. Let me see if I can explain this or it's totally problem centric. I think we'll directly take a problem and learn better. Nothing, sir. Time is there. Okay. What the? Train, where is it? What time? Where is it? I don't know. When is it? It's at, I think, 4:30, I think. 4:30 or 5 o'clock. I think maybe 5. Maybe mostly 5. Yeah. Wait, you want to leave me go early? But yeah, I'll have to do some packing, so I'll have to leave by maximum 2. I think I'll have to wind up. Maybe we will wind up a little early only today. Fine, let's finish this first and then we'll worry about that. Because I say something and if it doesn't happen, you'll be like, and all you'll start. Okay, question number 6 you wanted. No, we'll take 8. 8 is my favorite number. Okay. Alright. Sir, this is about shares. If you have an investment in shares, how we need to account is what we're going to learn. This is our class notes ka problem. I think it is there in study material also. Study mat question only. On 1st April 20x1, Sundaramurthy 25,000 equity shares has purchased of which company? X Limited. At what value? 15 per share. That means what is the total cost? 25,000 into 15 if you do, you will get 3,75,000. Sir, did they say Sundar purchased or Sundar had? Had. So, opening balance. Sir, dividend accrued ka opening balance. Sir, sir, interest accrues based on time. Dividend accrues on time. Dividend is company ka choice. Company can declare it. Company can choose not to declare it. So dividend will not have any accrued opening balance, closing balance. It's only that adjustment is only relevant for interest because dividend never accrues. Okay. That's one. Now check. Now people, I mean, sir, we have to put same working note, sir. No, sir. Here, no, they'll bring in some right shares or bonus shares and all. Working notes will be slightly different here. What you do is, if it is straightforward, no need to put any working note. If it is straightforward calculation, no need to put any working note. Directly you can do. Like here, is there any calculation difficulty here or very straightforward? Straightforward. Directly we will post the entry into the ledger. Now debenture ka what was the ledger format? Investment in debenture ka ledger format was what? Date to particulars, face value, interest, amount. Here date, particulars, face value. Instead of face value, here we take the number of shares for easier calculation purpose. Those are anyway dummy columns. Instead of face value, substitute with number of shares. Instead of interest, you can substitute with dividend. Amount column, you can keep it as it is. But for equity investment, sometimes company ICA solutions bring in dividend column. Sometimes they ignore. Okay. But in all our regular class problem, we have included dividend and we have solved. If you include also, nothing wrong. Okay, Naji? I think in the solution, in the suggested solution, only number and amount is there. Amount is what? Dividend column or investment column? Investment column. But it's okay. Anyway, dividend will present it as a working note also. Done, Naji? Even if you bring in a dividend column in between, it is absolutely okay. Now, we have purchased what as an investment? Equity shares. We have purchased it in the current year or it was there from last year. So this is investment account ka what? Opening balance. How much value? 25,000 into 15. How much is that? 3,75,000. What is investment ka opening balance? Where will you post it as? In the investment ledger, you'll write 2 balance brought down. How many number of shares? 25,000. What is the value? 375. No need for any working note. Here only you can write 2 balance brought down 25,000 into 15. In bracket, you show no need for separate working note. If it is easy. Done, ji? Next, nominal value as in face value of those shares are 10. Why is face value relevant? If at all this company declares, which company ka shares have you purchased? X Limited. If at all X Limited declares the dividend calculation will happen on face value. For that we need that, so let it be. On 20th June, the same person, Sundar, he purchased another 5,000 shares at what value? 16 5 are 80. So 80,000. Any stamp duty, brokerage, blah blah drama. Sir, if there is any stamp duty, brokerage, STT and all, it becomes what? DAT. What will you do? At the time of purchase you will add. At the time of sales you will minus. Here not there. So any working note necessary or not required? Not required. What is the journal entry for additional investment purchased? Investment account debit to bank account. How many shares did you buy? 5,000. So investment ledger mein you'll write to bank. Number of shares column 5,000. Amount column 80,000. So far there. Next, the directors of this company X Limited, they have announced a bonus and right shares. Bonus and rights have come. We'll see what has come first. No dividend was payable on these issues. On the right shares and bonus shares, should we have to calculate dividend or we should not? We should not. Why? Maybe the dividend has come in first and then the right shares and bonus have come. We don't know. But if the question says don't calculate, we will say good for us. We will not calculate. We will not worry about why and how and who and all. Not that you are worrying right now, but anyway. The terms of the issue are as follows. First, sir, what came over? Bonus. Which day to? 16th August. Bonus has come in one ratio. What ratio? 1:6. Meaning you will get one bonus shares. Don't interpret other way around. Sir, for one share you will get 6 bonus. Which company will give that? But tell me, I would like to buy that company ka shares. Very, very doubtful that. So whenever they give you the numbers like this, you always interpret one bonus shares for 6 shares held. If you have 6, so you will get how much? Old bonus, I will say. If you have one original shares or old shares, you will get, or if you have 6 original shares, you will get 1 bonus shares. Sir, till 16th August, investor has how many shares? Till 16th August. On 1st April, we already had 25. On 20th June only, we have purchased 5,000 more. So totally, how much do we have? If you have 30,000 shares, how much bonus will you get? Make a working note for that first. Number of bonus shares, how much is that? 5,000. Show a working note better. So number of bonus shares is how much? 5,000. Sir, bonus shares ka meaning is what? Can you tell me that bonus ka meaning? Bonus shares means additional shares given to existing shareholders for free. Yes. That means as an investor, we have to give any money to buy the shares or we will get it automatically for free. Automatically for free. So is there any cost associated for an investor for bonus shares? So for bonus shares, what do we do is in the investment ledger, we will just write 2 bonus shares. We will just write 2 bonus shares. Cost column, we will write 0. Amount column, we will write 0. Because are we spending any money or no money? But number of shares column, we will write 5,000. Because we have received a bonus shares of 5,000. Any problem on this now? So totally, how many shares we have here? 35,000. Including bonus, 35,000 shares in totality we have. Next comes right shares. Right shares came on what day? 15 days later. That is 31st August. Rights also came in one ratio. What is that ratio? 3:7. The right shares ka meaning is what? Right shares is also additional shares given to existing shareholder at free or at a discounted price, at a concession price. What is that concession price here? 15. First, let's find how many right shares are we eligible. How many are we eligible? If we have 7, we are eligible to buy 3. This is the ratio. If we have 7 original shares, we can buy how many right shares? 3. Do we have 7 original shares? How many do we have? 35,000 shares. Till the right shares ka date, if you count, we already have 35,000 shares. So how many right shares are we eligible to buy? When you cross multiply, you will get 15,000. 1 minute. Sir, if you remember, nothing much, I'm explaining only still. Sir, if you remember in regular class, I used to say, right shares is like your Amazon coupon. It's like your Flipkart ka or Amazon ka coupon. If you have Flipkart ka voucher or Amazon ka voucher, what and all can you do? You can use that voucher and buy some goods. Can you sell it to someone if you want? Yeah. Or if you're crazy, you can tear it also. If you're crazy, I mean, I don't. That depends on you. Yes. So there are multiple options. Yes. One, either you will use it and buy some goods, or you can also sell it to someone. Possible. Right shares are also like that one. Right shares are also like that one. Whenever you are eligible to buy right shares, as an investor, you have 2 options. Rather, you have 3 options. One, you can utilize this rights. You can utilize this rights and buy how many shares? 15,000 shares. Or you can sell this rights to somebody else. You can sell this rights to somebody else. Or you can say, I don't want it. I have reached nirvana. I don't wanted, meaning you can reject also. Your call. Nobody will reject. Either they will utilize and buy or they will sell. Renounce. Okay, na sir? Now let's see Mr. Sundaranga, what he did. Sir, right shares, if you want to buy, how much price you need to pay? 15. So let's see what Sundars did. The shareholders were entitled to transfer their rights in full or part. They can sell the full right or in part right. Sundar, what did the Sundar do? 33%. Sundar sold 33.33% of his entitlement to Shaker for a consideration of 2. So Sundar has done both. What is that both? 33% means, can I say 1/3? 1 by 3, if you're doing a calculator, you'll get 0.333333. 33.33 ka percentage divided by 100 also, if you do, you'll get 0.333333 only. Correct? No. Sir, Sundaranga sold how much? How much of rights Sundar sold? 1/3. 1/3 he sold. How much right shares he was eligible? 15,000. How much did the right he renounced or sold? 15,000 ka 33.33 percentage. If you don't want decimal, take 4. If you don't want fraction amount, take 4 decimals. 33.3333. 4 decimals you take, will get perfect number. How much are you getting? 5,000 shares. Okay. 5,000 shares. So Sundaranga sold to whom? Shaker. Free, or he collected some money? He collected how much money? 2 rupees. How many rights were sold? Rights towards 5,000 shares were sold at a price of 2 rupees per rights. How much is that? That means for Sundar, this is an income. Where will income go to? P&L. That's what you're right. Amount transferred to P&L is 10,000. Okay, G. So the entry for this, if you want to pass, you can write bank account debit to rights income, or you can directly write bank account debit to P&L. So is this entry affecting investment ka ledger or no effect? Is this entry is affecting investment ledger? No. So will this come in your anywhere in your investment ledger? No. Because the entry is bank account debit to P&L. You are preparing investment ledger, no? Investment is neither getting debited nor getting credited. So no effect. If at all they ask P&L, then you'll have to post this entry. Sometimes they also ask that. I don't know whether they've asked here, but anyway, just say. Sir, Sundaranga sold 33% means, what about the balance? Balance, obviously, he would have exercised. Balance, right? Sold or he utilized? Utilized. Calculate that. In 15,000, 33% is sold means balance is 66.67%. Or you can calculate like here only. No? In 15,000 shares, 5,000 shares ka rights he has sold means balance will be what? 10,000. Okay? 10,000 shares he ignored or subscribed. Meaning he purchased these shares. He purchased the shares. Right shares have to be purchased at a particular price. What is that? 15. How many shares? 10,000. At what price? 15. How much value? 1,50,000. Have a separate working note for all of them. It will carry marks. What is the journal entry? So right shares is also investment only. No? What is the journal entry for additional investment purchased? Investment to bank. How many shares? 10,000. How much value? 150. Check if it is posted. To bank 10,000 and 150. But yes, this for the rights. This we call it as rights subscribed. Rights subscribed. Next, dividend. Dividend. Careful about this. Dividends for the year ended 31st March 20x1. Stop there only. Go back to the first line. What did they say? On 1st April 20x1. That means our current year is starting on 1st April 20x1. What is our full current year? 1st April 20x1 to 31st March 20x2. 20x2. Keep that in mind. Come back and read this adjustment again. Dividend for the year ended 31st March 20x1. X2 Allah. X1. So it is last year. So this is a dividend relating to last year. It was declared at what rate? 20%. Sir, last year ka dividend will be declared in the AGM, no? That means AGM will happen during the current year period, right? So last year ka dividend was declared in the current year. At what rate? 20%. When did the dividend get declared? First October. Yes, sir. Sir, last year, how many shares we had? Now people, we don't have to. So we have 4 categories of shares. Can you tell me what are those 4? If at all you want to say. We have 4 types of shares if you want to call it. One, we had some opening balance. Then we made a new purchase. Then we got some bonus. Then we got some rights. On bonus and rights, should we have to worry about the dividend, or question is saying no dividend? On bonus and rights, we don't have to calculate the dividend. Question is clearly told. I mean, the dividend drama will only come on 2 shares. What are those? Opening or purchased? Yes, opening is 25, purchased is 5. Oh, what are they saying? Alright, now check. Dividends, read this line once again. Dividends for the shares acquired by him on 20th June 20x1. On 20th June 20x1, how many shares did he buy? On 20th June 20x1, Sundarmurthy purchased the shares of 5,000. Yes, sir. Dividends for the shares acquired by him on 20th June are to be adjusted against cost of purchase. We have discussed this adjustment. Can someone? Perfect. Sir, this is something called pre-acquisition dividend. Do you remember we discussed this consolidation? What is the journal entry for pre-acquisition dividend? I told you pre-acquisition dividend adjustment is not from AS 21, it is relating to AS 30. Here it is just directly come as an adjustment. So what is the entry? The journal entry is bank account debit to investment. Yes, sir. Fine. Now this on 20th June, whatever shares you have purchased, ideally you should not get dividend on them. Agreed. On 20th June, whatever shares you have purchased, ideally you should not get dividend. Why? Because you have purchased the shares in the current year. But is this dividend for the current year or last year? Last year. Yes. So ideally you should not get it. But in reality, are you getting? Yes. Hence, is this normal dividend or pre-acquisition dividend? Pre-acquisition. And for that, we have to, will we treat this as a normal income or adjusted against cost of investment? Adjusted against cost of investment by passing the journal entry bank account debit to investment. How much? How many shares? 5,000. Dividend is always calculated on face value. Face value of each share is 10. What rate was the dividend declared? 20%. So the dividend amount is 10. Easy now. This is on what shares? Shares purchased in the current year. What sort of a dividend? Normal or pre-acquisition? That is what I've written. In dividend, I have categorized into two things. One, we have a pre-acquisition dividend on what shares? 5,000 shares. How much is the amount? 10,000. What is the journal entry? This. The provision is pre-acquisition dividend should be reduced from the cost of investment. Agreed? But will we receive the dividend only on this shares or even opening balance? Opening balance. Last year, how many opening balance we had? 25,000. This 25,000 shares, you had it last year. Huh? Yeah. And the dividend is also for last year. That means any dividend on this 25,000 shares is a pre-acquisition dividend or normal dividend? Normal dividend. Because last year you had the shares and the dividend also relates to last year. So this is a normal dividend. So in this problem, we have normal dividend also, pre-acquisition dividend also. Calculate. What is the dividend calculation? 25,000 is a number of shares. Each ka face value 10. Dividend declared at what rate? So the dividend will be how much? 50,000. This is a normal dividend. So what is the journal entry? Bank account debit 50,000 to dividend income 50,000. And this dividend income, where it will go? P&L. So the next entry will be dividend income account debit to P&L account. How much? 50,000. That's what I've written here. This 50,000 will get transferred to P&L because this is the entry. Okay, sir. Now will this particular adjustment affect investment ka ledger? This. No. What about this? What about this? Will it affect investment ledger? Yes. What will be the posting? What will be the posting? In investment ledger, you will post it as by bank. Have they done? Yeah. By bank, how much? 10,000. Why? Because this is normal dividend. This is what sort of a dividend? Pre-acquisition dividend. And as per AS 13, pre-acquisition dividend should be reduced from the cost of investment. That's what we have done. Okay, sir. Yes, Manas. If this line is not given. Oh, perfect. I think I've addressed this in the class. Maybe I've given a note also. No problem. So our question is, if this line was not given, what should we do? Sir, ICI always assumes, just an ICI assumption, whatever shares you have purchased in the current year, you will receive dividend on that also. Even on whatever shares you have purchased in the current year, on that also you will receive the shares. But the dividend relates to current year or last year. That means it will always be what dividend? Pre-acquisition dividend. So you will still treat it as a pre-acquisition dividend, even if this line is not there. That is what ICI has done on a couple of questions. So follow the same. Anything else? He's saying, sir, if in this problem they have told no dividend is payable on right shares and bonus shares. If that line was not there, would you have calculated the dividend on rights and bonus also? Yes, you would have. Yes, some problems maybe we have done that in our regular class. I think in ICA only such question material only such questions are there. Yes, this is sorted out. Can I proceed further? Now people till you're done. No, next one. On 15th November, Sundaramurthy finally 25,000 equity shares he sold at a premium of 10. So premium is always calculated from face value. What is the face value? 10. How much premium? 5. So what is your selling price? 15 per share. 15 per share. Whenever there is a sale, you need to calculate net sale proceeds. You need to calculate profit or loss on sale of investment. First, we need to put up a working note for this. First, net sale proceeds. How many shares sold? At what price? 15. Calculate that. How much is that? So, sale proceeds is 3,75,000. There is no brokerage. If there was brokerage, minus. This one and all will not be there. Come dividend adjustment and all, mostly doubtful that they'll not give there. Okay. So brokerage may come. If at all they say sale transaction attracts a brokerage of 5%. Sale transaction attracts a brokerage of 5%. What you will do? Will you take 375 or you will minus 5%? Minus 5%. Such questions are also available. So here it is not there. So I've taken the number as it is. Whenever you sell, you will make some profit or you will make some loss. How do you get profit or loss? Compare sale price with cost price. Here have they told how are we supposed to calculate the profit? Check the question. You are required to prepare investment ledger and you also have to prepare P&L, but you're supposed to do the valuation on what? Average cost. Not FIFO, but average cost. Even if it was not told, we would still prefer what method? Average cost. Average cost is the easiest. How? Very straightforward. Take your calculator. Sir, you have purchased the investment multiple times. First time when you bought, how much cost you incurred? 375. Add. Take your calculator, keep punching the number. This. Again, you purchased it by paying 80. So add. Bonus shares plus 0. So no cost. Right shares you spend 150. So add. Okay. Right. This is the cost for how many shares? This is cost for one share or this many shares? 45,000 shares. Yes, sir. That means what is average cost? Understood? Everyone understood? You just have to find average cost. This is the cost for one share or this many shares? This many shares. How much is that? 45,000. For one share, how much is the cost? Like that you'll have to do. That's your average cost. Clear? But you should not do this. One adjustment many will forget. So that is where I did like this. Do not forget there is another one. What? That also you should minus. Because 10,000 is what? Pre-acquisition dividend. What is the concept of pre-acquisition dividend? Pre-acquisition dividend should be reduced from the cost of the investment. Many will forget this when they are calculating. 3 marks, 2 marks, go in there. Don't do that. Okay? Careful. So add all this and subtract this. Add what? Everyone understood that? Add all this and subtract 10,000. What are you getting? 5 lakh. I think that's what I've written here. Add all this and subtract 10,000. You will get 5 lakh 95,000. 5 lakh 95,000 is a cost for one share or how many shares? Adding all this, you will get 45,000 shares. So this is the cost for 45,000 shares. So for one share, how much is the cost? Some number you are getting. Did you sell one share or how many shares did you sell? 25,000. Or if you want it as formula, you can construct your own formula. What is the formula? Total cost divided by total number of shares. If you do this, you will get average cost of one share multiplied by the number of shares. So like that also you can mark it up as formula. Done now. So multiplied by how many shares did you sell? 25. How much is the cost? 3,30,000 555. Sale value 375. Cost is only 350. So 44,445 is the profit on sale. Now 2 entries you'll have to post: sale proceeds and profit. Where it will come? What is the journal entry for investment sold? Bank account debit to investment. How much value? Sale proceeds of 375. Posted a number of shares column 25, amount column 375. You made a profit. Profit means credit or debit? Profit means debit or credit? Debit. How much? 44,445. In the debit side, one number. Let's not fight over one rupee. Okay? All good? Then what's our balancing figure? Balancing figure. Arrived as a, you can calculate this also, or you can get it as balancing figure. If you want to calculate, you can. How? Very simple. Add all this. How much you said? Adding all this, how much was this number? 5 lakh? 5 lakh 95,000. 5 lakh 95,000 is the cost for how many shares? 45. In 45 mein, how much have you sold? In 45 mein, how many shares have you sold? 25. How much is remaining? How much is remaining? 20. So multiply by 20. Multiply. How much are you getting? 26. Okay. 2 lakh. 2 lakh 60. 2 lakh 64. 444. This only you will get it as balancing. Either you can calculate or balancing. Yes, no. Sir, simple. If you want cost of investment sold, you will multiply it by the number of shares sold. If you want cost of remaining shares, then you will multiply by remaining shares. Calculate or balancing figure, your choice based on the availability of time. Okay, Nasaru. If you are preparing dividend column here, if you are preparing one more called dividend column, any balancing figure in the dividend, you transfer it to P&L. But here they have asked P&L also. If you just check, they have asked investment as well as P&L. 3 things I think goes to P&L here. If I recollect, what are those? One is profit on sale. How much we got? Or maybe first let's call out the 3 components. Profit on sale. Then dividend or normal dividend. Normal dividend. One more. The rights, Sundar sold it to Shekhar. That rights income. What is the rights income? If you want, you can check. Rights income is 10,000. Dividend income is, normal dividend is 50,000. See, rights income 10,000, dividend income 15,000. Profit on sale is 44,555. These are the 3 things which will get transferred to P&L. When they ask you P&L account in this problem and all, don't prepare it in that normal format. What they are really asking is the extract, meaning only these P&L components which you found, how it gets reflected in P&L. So you can prepare P&L in your normal old format, trading P&L. Remember, all expense on the debit side, all incomes on the credit side. Post it and leave it at that. No need for full format, not necessary. Yes, sir. I think all the things that 1 minute, let me quickly review. Yeah, I think that's done. Okay, people, thank you.
Other deficiencies, but not,
Hello, people. Let's. AS20. Hello, people.
Now guys, let us start with the next chapter called as activity based costing. Now this chapter ABC is nothing more than an extension of the previous chapter overheads. That is all about it, right? That is all about it. So this chapter ABC, as I just said, is an extension of overheads, right? Now in this chapter, what we're going to do here, chapter 3, your ABC, this chapter, the objective of this chapter is to calculate the overhead cost per unit. Overhead cost per unit. Sir, you said this was the objective of the previous chapter also, that is overheads. This chapter also, once again, you are saying the overhead, the objective of ABC is to calculate the overhead cost per unit. Why do we need two chapters doing the same objective? Now, let me tell you this. Now, in the previous chapter, overheads, absorption costing system, that is traditional. It's called as a traditional costing system, right? ABC is basically your modern way of dealing with overheads. It's a modern costing system. In overheads, what we did, first we had items of overheads, correct? We have multiple line items of overheads. Now, what we did, first we did a primary distribution. That is, we distributed the overheads to all departments, P1, P2, P3, S1, S2, and all we did, right? Then what we did, this production, the service department overheads were redistributed back to the production departments. That was actually done under the secondary distribution. At the end of secondary distribution, you had only P1, P2, P3 and all, right? And finally, we did something called as absorption, and we calculated the overhead cost per unit of A, B, C, D, etc. the products. Clear with this? This is what we did. This is what we did. Correct, guys? Now, this chapter ABC says the starting point for this chapter is also line items of overheads. The destination of this chapter is also to calculate the overhead cost per unit of every product that the company is manufacturing. What this chapter says is, we are agreeing with the starting point, we are agreeing with your ending point, but we do not accept the journey that you are doing. That is, your primary distribution, secondary distribution. This journey has a huge flaw in it. It has a huge flaw in it. What is it? Is what we are going to study here in ABC. Clear with this, guys? Not much of any discussions, any intricate discussions like under absorption, over absorption. No, the root alone, how it should be different, is what we are going to learn here in ABC. Clear with this, guys? Now, first, in our traditional costing, the previous chapter overheads, what we saw was there are line items of expenses like your factory rent, right? You had your factory rent, your supervisor's salary, you had your repairs and maintenance, you had your depreciation, and so on. It just went on. Now, what we did, we apportioned each of these line items to all the department costs, all the departments. Correct, guys? Now, why did we do that? Because we did it because we said overheads was telling us that, look, the reason why you are incurring the cost is because you have these departments, right? So, apportion all your costs to each of these departments. So now, because you are incurring these costs for the departments only, are you clear with this? This was the logic given by what? Given by overheads. Now, this is where your ABC clearly disagrees. It says, look, you are not incurring overheads, or you are not incurring these expenses because you are having the department. You are incurring overheads because of the activities happening inside every department. I'm repeating. ABC says the presence of this department, P1, okay, then it means you're going to incur some expense. No, P2, expense. No, the presence of the department is not the reason for you to incur expense. There are activities that are getting done under every single department. It is the activity because of which the cost is being incurred. Or in other words, ABC says because you have activities, right? It results in consumption of resources, and consumption of resources results in incurrence of cost, and hence apportioning the cost to the departments by giving a justification that the presence of department is the reason why I'm incurring the cost is absolutely incorrect, right? Ultimately, we are also going to find out only the overhead cost per unit, but the manner in which we are going to do, we are not going to route it through departments. Instead, we are going to route it through activities. That is what ABC is saying. Are you clear with this, guys? Are you clear with this, guys? Right. Now, what does ABC say? What does ABC say? Now, look at this. We saw one previous example, right? Wherein we saw the concept of your blanket overhead rate versus departmental rate. Guys, yes, you guys remember this, right? Now, there we saw clearly that a departmental rate is much superior and better than a blanket overhead rate. Why? One of the reasons we saw was, right, if I am using a departmental rate, I have the flexibility to choose the base quantity which is more relevant for that department. Correct, guys? Guys, please reciprocate. Yes, you guys are following here, right? In other words, here, if P1 is a machining department, it makes more sense to apportion the P1 department cost using machine hours, right? If P2 is actually a labor department, an assembly department, it makes more sense to apportion P2 department overheads using labor hours. Clear with this, guys, right? So we saw that our departmental rate is much better than your blanket rate. Now, ABC says even that departmental rate is also not correct. Why? Let me give you an example. Now, what happens is, let us say I have a factory. So, let us say we are using departmental overheads only. right? Let us say there is one department P1, there is one department P2, there is one department P3, right? Now P1, let us say, is a machining department. Okay, now what happens? Let us say the machining department's overhead cost was 1 lakh rupees. I'm just talking about the single department, right? Blanket rate anyways is bad. No, we saw in overhead chapter the departmental rate is better. But ABC is further saying, wait, departmental rate is also not correct. Why? If you're using departmental rate, what will you do? This 1 lakh rupees, right? You will divide it by the machine hours spent in this department, arrive at the machine hour rate, use that as an absorption rate. Correct? Yes. Now they are saying, wait, don't blindly go based on department. Further dig deep into this. Now in this P1 machining department, there are actually 3 activities happening. Okay. One activity, the first activity is called as machine running activity. Machine running activity. Then you have one more activity called as setup activity. Then you have something called as inspection activity. Right? Now they have found out that yes, in department P1 there are actually 3 activities that are happening, and the machine running activity, right, is actually incurring a cost of 60,000 rupees. The setup activity is actually incurring a cost of 15,000 rupees, and the inspection activity is incurring a cost of 25,000 rupees. Or in other words, the breakup of this 1 lakh is further broken down into activity wise. Are you clear with this, guys? Now, if you see, it will all make sense. Now, what has happened? Departmental rate was actually absorbing the entire 1 lakh rupees by taking machine hours as the base quantity. But technically speaking, if it is now broken down into multiple activities level, now you can see that only 60,000 rupees is driven by machine hours. Correct? Only 60,000 rupees is driven by machine hours. Setup activity cost of 15,000 rupees is driven by some other cost driver. Maybe that could be the number of setups. What do you mean by a setup activity? Let us say I'm starting a class. I'm doing a class here right now. Okay, right? Now, the moment I start a class, right, I need, before the start of the class, I need the setup to be done. The camera should be turned on, the light should be turned on, and all these recordings and all these streamings, everything should be done. Correct? Now, let us say that I am going to take a class for 2 hours, right? Let us say I'm going to take a class for 2 hours, right? On day 1. On day 2, let us say I'm going to take a class for 8 hours. Now you tell me whether I'm taking a class for 2 hours or I'm going to take a class for 8 hours, the setup cost or the setup activity will remain the same. Correct, guys? Or in other words, this setup cost or the setup activity cost is not driven by the number of hours, it is driven by the number of times I do the setup activity. Clear? So this 15,000 rupees is driven by a completely different cost driver. Are you clear with this? And this inspection, it has nothing to do with my machine hours. This inspection activity maybe is driven by the number of inspections carried out. Are you clear with this? So technically speaking, what activity-based costing says is, look, even your departmental rate is wrong. It says, if the name of the department is machining department, absorb everything based on machine hours. No. Further break it down into activity level. Activity-wise, find out what is the factor that drives the cost. Keep that as the base quantity to arrive at your absorption rate. Are you clear with this, guys? Are you clear with this? That's why here we don't actually use departments as the basis for actually apportioning the cost. We further break it down into activity, and activity-wise we find out the factor that drives the cost, right? And now it makes more sense because now the manner of apportionment will be much more meaningful. Are you clear with this, guys? Are you clear with this? This is exactly what ABC says. So what they are saying is, first list out the activities, right, and find out the activity-wise cost, right? That activity-wise cost is called as a cost pool. Pool means what? Collecting things together. It's called a pool. Clear with this? So activity cost pool means the activity, that particular activity's amount, cost amount that you're incurring. Clear with this? Then find out the cost driver, that is nothing but your base quantity, right? And arrive at your cost driver rate. This is nothing but the absorption rate that we saw there. Are you clear with this? Now, if you do it like this, it is going to be a much more meaningful manner of apportioning your indirect cost to the products. Are you clear with this, guys? This is all ABC says. That's about it. ABC chapter is over. That's all. Now, let us go and do the numerical problems. You will see it by yourself. Clear with this, guys? And of course, the terminologies alone will be slightly different. There, whatever we call as department, here these guys call it as activity. There, what we call as base quantity, here it's being called as cost driver quantity. There, what we call as absorption rate, here it's called as a cost driver rate. There, what was called as a departmental overhead, here we call it as a cost pool. That is a particular activity's cost amount. Are you clear with this? These are some basic differences, but for that, everything else is the same, and this is going to be a very structured and an easy chapter of all. Are you clear with this, guys? Every attempt, they are testing for about 10 marks. ABC and overheads put together, short 10 marks. At times, I've even seen 15-20 marks coming to these two chapters put together. So this is going to be a huge coverage, right? This is all about it. So that's all. So why is it difficult? Why people say it's difficult? After finishing overheads, now if you see this, it is going to be easy because the base for this chapter is actually overheads. The flaws of overheads chapter are getting fixed under this particular chapter. Clear with this, guys? So now let's move on. Let's move on directly to a numerical problem. Look at this illustration. KD Limited is following an ABC costing system. The budget overheads, the cost drivers, and the volumes are as follows. Now look at this. Instead of departments, they have mentioned the activities, right? Material procurement activity, your material handling activity, your maintenance activity, setup activity, quality control, right? They have listed the activities. Each of the activity, how much is the cost incurred? That amount is called as cost pool. Learn the terminologies, right? The cost pool is given. Now they've also given the cost driver. What do you mean by cost driver? The factor that drives that particular activity's cost. This is nothing but the base quantity. So material procurement activity is driven by what? Number of orders. Clear with this. Material handling driven by the number of movement. Maintenance hours. Setup, number of setups. Quality control, number of inspection. Clear with this. Now they've also given the cost driver quantity. This is nothing but the base quantity. The values are given. Totally in this particular year, 1200 orders were there, 1240 movements were there. So 17550 maintenance hours, 1450 setups, and 1820 inspections were there. Clear with this, guys. These are all given. The company has produced a batch of 7,600 units. Its material cost was 24,62,000 and wages were 4,68,500. Right? The prime cost components are given. Usage activities of the said batch are as follows. So now, this is all these cost drivers are for a year. Now, what have they said here? One particular batch, they have given the data. So material orders were 56, 84 material movements were done, 1420 maintenance hours, 60 setups, and 18 inspections. You are required to calculate the cost driver rates and calculate the total and the unit cost of the particular batch. Now, guys, very simple. Now, it's a 3-step procedure. Rather, I would say a 2-step procedure in ABC. First, you need to calculate the cost driver rate. This is similar to what? Absorption rate. Now, what will you do here? List out the activities, right? Now, what is going to be your total activity-wise cost pool? You take that, divided by the total cost drivers for the year. You take it. Now you will arrive at the cost driver rate. Cost driver rate will be what? In this case, for every order, the material procurement cost is 1535. Material handling activity, per movement, the cost is so much. Maintenance, per maintenance hour, it is so much. Per setup, the setup cost is so much. Per inspection, the quality control cost is so much. Like this, you will arrive at the respective cost driver rates. Are you clear with this? Now what will you do? Now what will you do? So they have given us that, look at this. For a particular batch, the batch size is how much? For a particular batch with a batch size of 7,600 units, they have given the material cost and the wages cost. So now look at this. The material and the wages cost are given, and I think the batch size is 7,600. Okay, 7,600 units of a particular batch. So now material labor is given. Overheads, how will you calculate? This batch has consumed 56 orders, 84 movements, 1420 maintenance hours, 60 setup hours, and 18 inspections. So what you need to do is take the respective cost driver quantity consumed and multiply it with the respective cost driver rate we just found out here. You marry the figures. That's about it. There is nothing but absorption rate into base quantity consumed. Here you call it as cost driver rate into cost driver quantity consumed. You just do it. So now what you will get is, you will get the product wise total. For this batch, what is the total cost divided by the number of units? You will be arriving at the total cost per unit. Are you clear with this, guys? Anyways, this is the objective of this chapter also. Are you clear with this? The only difference is what? Instead of using departments as the base, here we use what? Activities as the base. Are you clear with this? Now there are a few lines of differences between your traditional overhead costing system, I'm calling it as TCS, traditional costing system, and ABC. There under the traditional costing system, what was called as departments, here it's called as activities. There, what was called as departmental overheads, here is called as activity cost pool. Then what was called as absorption rate is here called as cost driver rate, and what was called there as base quantity here is called as cost driver quantity. This is all the difference between your traditional costing system, overhead chapter, and ABC. But for that, everything else is the same, guys. Are you clear with this, guys? Are you clear with this? But it's equally important. It's equally important, no doubt. It's important because generally ABC sums will be big, solution will be simple. Why is it big? Because they need to necessarily give you a lot of data. Clear with this, guys? Done, right? Now let's do one numerical problem here. That's about the chapter. Actually, that's about the chapter. Now let's do a numerical problem here. ABC Limited manufactures two types of machinery, equipment Y and equipment Z, and applies or absorbs the overheads on the basis of direct labor hour. Presently, they are using the traditional costing system. They are taking the direct labor hour as a base quantity. The budget overheads and the direct labor hours for the month of December are 12,42,500 and 20,000 hours respectively. Right? So with this, you can calculate the pre-determined rate in the traditional system. The information about the company's products is given as follows. So equipment Y and equipment Z, the budgeted volume is given, the number of units of Y and Z produced, the direct material cost is given per unit, right? The direct labor cost. So every unit of Y takes 3 hours to complete, and every hour of Y is going to take what? And every hour is being paid at the rate of 150, so it's going to be 450 rupees. And every hour, every unit of Z takes 4 hours, and every hour is paid at an hourly rate of 150. So 4 into 150, 600 rupees is the labor cost per unit of Z. Now, ABC's limited overhead of 12,42,500. What is this figure? The total overheads that we had. Now they are breaking it. It's been identified with 3 major activities: order processing 2,10,000, machine processing 8,75,000, product inspection 157,500. Now they have broken it down into multiple activities. These activities are driven by the number of orders processed. That is, your orders processing is going to be driven by the number of orders processed, your machine processing based on your machine hours, and your product inspection on basis of inspection hours. The data are given below. Total number of orders processed 600. Out of that, 350 were the orders processed for Y, and 250 were the orders processed for Z. Similarly, machine hours work total is given, and product wise breakup is also given. Inspection hours total is given, product wise breakup is also given. Right now, required number 1, assuming the use of direct labor hours to absorb or apply the overheads to the production, compute the unit manufacturing cost of equipment Y and Z if the budget manufacturing volume is attained. Now, using the traditional costing system, you calculate the absorption rate and all, charge it to the product, and arrive at the total cost of the product. This is what they have asked for. Now, that's pretty much simple. We know that the direct material cost is given, direct labor cost is given. Now, how do you arrive at the overhead rate? Very simple. So in the traditional system, it's going to be budget overheads divided by budget hours. 12,42,500 divided by 20,000 hours. So how much is that going to be? That is going to be 62.125 rupees per hour. This is the absorption rate. Correct, guys? Right? Now we know that yes, product Y, that is equipment Y, took 3 hours, and equipment Z took 4 hours. Right? So we just need to multiply it here. So equipment Y took 3 hours. So it's going to be 3 into 62.125. And equipment Z took 4 hours, 4 into 62.125. So product wise, what is the overhead cost? 3 into 62.125, that gives you 186.38 rounded off. And similarly here, it's 4 into 62.125, that gives you how much? Roughly, I think they have retained the decimals here. It comes out to 248.5. Now, it's pretty much simple. What they have done, they have taken an absorption rate, maybe in this case even a blanket rate they have taken, and charge it off the products. Are you clear with this, guys? So with this, you've got what? The equipment Y and equipment Z's total cost, you have arrived at it. Clear with this, guys? Clear with this, guys? Now, this is based on what? This is based on your traditional costing system. Next, suppose now they are using this ABC system. Now what will happen here under the ABC system? Look at this. Under the ABC system, the total overheads is now broken up into 3 different activities. So now we have the activity cost pool, and the activity wise we know what is the total activity cost driver consumed. So you divide the two, you can arrive at the cost driver rate. So now I told you guys that the activity based costing system, that's a 2-step approach that we need to follow here. So first you break it down into activity. This overhead cost ideally is called as cost pool. So now I have the activity wise how much is the cost, right? And what is the activity wise cost driver quantity? 600, 50,000, 15,000. I have this here. These are given in the questions. 600, 50,000 and 15,000. So whatever is the cost driver that drives the respective cost, that drives the respective activity that I need to take, and I have arrived at the cost driver rate here. So it's going to be 350 rupees per order process. This is going to be 17.5 per machine process, and here it's going to be 10.5 rupees per inspection hour. Are you clear with this? So now that I've got the cost driver rate, what will I do now? Now under the ABC system, anyways, my direct material, direct labor, the prime cost components and all will not change whether I follow traditional costing or my ABC, because the traditional costing, overhead costing, and your ABC deals only with the overhead component. They don't deal with the prime cost component. Now in this case, what happens here is, so now first you have the 3 products here. You have the 3 activities: order processing, machine processing, and inspection here. Now look at this. Now look at this. So now what do you do here? First, you just have to marry the figures. With respect to order processing, the cost driver rate is how much? 350 rupees. 350 rupees. Now I have 350 orders for Y and 250 orders for Z. So here it's going to be, right, 350 orders into 350 rupees, that gives you how much? 1,22,500. 250 orders into 350 rupees, that gives me 87,500. That is the cost driver rate multiplied with the cost driver quantity consumed for the respective product. If I do, automatically I will be getting what? I will be getting my respective share of the overheads for the respective products. Similarly, machine processing activity, if you see, what is the cost driver rate? 17.5 rupees. So I have the 17.5 rupees here, multiply it with the respective machine hours taken by the products. The products, each of the products took how much? 23,000 and 27,000 respectively. So you just need to multiply it here. So 23,000 and 27,000. This is going to be 23,000 hours into 17.5. This is going to be 27,000 hours into 17.5. Are you clear with this? This is going to be the respective calculation. Are you clear with this, guys? Are you all clear with this? Similarly, for inspection, per inspection hour, it's going to be 10.5. And how many inspection hours we spend for the respective products? 4,000 and 11,000 respectively. So it's going to be 10.5 rupees into 4,000, 10.5 rupees into 11,000. I'll get these figures. So now we've got what? The overhead cost for each of these 2 products as well. So now what do we do? Divided by respectively by the number of units, you'll get the total cost on a per unit level. You'll get the total cost on a per unit level. As simple as that. Guys, this is not a very intricate or a difficult calculation and all. Basically, everything is the same. Instead of calling it as an absorption rate, I call it as a cost driver rate. Instead of calling it as a base quantity, I call it as a cost driver quantity, and I just charge it off to my products. Are you all clear with this, guys? Don't think that this is something else. This is very, very simple. The issue only is here you need to understand why we are doing ABC. Once you know that, it is going to be a cakewalk, and as simple as that. Clear with this? Done, guys? Are you all done? Are you all able to understand this? Right? What is the next part of the question? ABC Limited's selling price are heavily based on cost. By using the direct labor hours as an application base, calculate the amount of cost distortion that is under or overcosted for each of the equipment. Now, what they are saying. Now, look at this. If I follow the traditional costing system, what is the cost per unit? For Y, it is 936.38. For Z, it is 1298.5. Whereas if I follow the correct ABC system, the per unit cost is changing. Correct? So now what we need to do is look at this. If I am following the traditional costing system, this will be the respective cost per unit. If I am following the ABC system, this will be the respective cost per unit. Ideally speaking, which is correct? ABC is correct. But currently the company is following what? Direct labor hour as the basis of apportioning your indirect cost. So now ideally every unit should have been costed at 976.8, but they are wrongly costing it at just 936.38. What has happened? The cost distortion is the product Y is being undercosted to the extent of 40.42 rupees. Are you clear with this? Similarly for equipment Z, presently they are valuing it or they are costing it at 1298.5, but ideally speaking it should have been valued at 1266.16. The difference is what? They are overvaluing it by 32.34. Are you clear with this? Both undervaluing and overvaluing. That is both undercosting as well as overcosting are bad. You need to use the right methodology of costing. So look at this. The low volume product Y is undercosted and the high volume product Z is overcosted using the direct labor hours for overhead absorption. See, a wrong methodology of absorbing your overheads will lead to a wrong selling price fixation, which will result in a huge failure of the business itself. Now, honestly, guys, this is the reason why many startups fail. What they do is the moment they see little amount of money, they spend a lot in a lavish office and all that without knowing that all these office are overheads. It needs to be properly apportioned. It needs to enter into the product properly and utilize it properly. Based on that, the selling price needs to be fixed. They don't even know that the market is ready to pay that much. If they take all these costs and add it onto the product, now what will happen? The market will not be ready to pay because your price will be more. The competitors will be fixing a price which is nominal, right? Now no one will come and buy it from you. The business will crash. This is the reason ABC is actually a game changer in the industry, because for every activity it is showing you the driver, right? Now if you want to reduce the particular activity cost, you can just go and reduce the cost driver. That's all. Clear with this? There is a direct relationship between the cost driver and the cost pool. If you want to reduce a particular activity cost, go and control your cost driver. Are you clear with this, guys? Are you clear with this? So for example, right, in your real day life you can use ABC and all. For example, if you are a student who is attending a face-to-face lecture, right, your cost driver will be number of lectures held, not the number of hours. Because you will say, sir, every day if you keep totally, let us say I'm planning for a 100-hour session. Example I'm telling you. If I every day keep a 2-hour session, so I will be conducting the class 50 times, correct? Which means you need to come and go for 50 times. Your cost is driven by the number of visits or the number of lectures, correct? If you are face-to-face student, because every time you come and go, you will be incurring transportation costs, correct? That you only need to bear. Yes, guys. Whereas if you are an online student, you will not be bothered about the number of lectures. You will only be bothered about the hours. Why? Because 100 hours you are watching a lecture, right? Accordingly, you need to, be incurring some electricity cost, obviously some basic light, or you'll be using a system for that, some electricity cost. That is driven by the duration, not by the number of lectures. Clear with this? So for you, the cost driver, you will be driven by the number of hours, the duration. Whereas a person who is attending a face-to-face, he will not be bothered much about the duration. He will only be bothered about the number of lectures. He will say, sir, this 100 hours, sir, you finish off in 10 days. 10 days per day, 10 hours you take, finish off. He will be happy. Are you clear with this? Are you clear with this, guys? Even in real life, you can use ABC in order to control your cost. Simple. You just list out all the costs that you are incurring.